Hi everyone, hope you're all doing good. So this is Trading Coach this side. So in this particular video, we are going to discuss about something called as the momentum swings. So to put it in a nutshell, momentum swing is actually a price action structure which will help you to understand the big orders that is taking place in the price action. So whenever the big players or whenever some big orders exits or enters into the market, we can identify that with the help of momentum swings. So we will discuss more about this particular concept. But before we do that, as usual, I recommend you to click on the subscribe button, tap on the notification icon, so that whenever I release any new and insightful trading contents, you'll be able to receive it directly on your feed. And apart from that, if you like to know more about me, more about my trading style, more about my approach, you can find them online on my website, that is www.tradingcoach.co.in. So without wasting any further time, let us get started. Alright, so here if you look at this particular chart, you can see I have made two nice diagrams over here on your left hand side as well as on your right hand side. So this is what we call as a momentum swings. So the one on your right hand side, that is what we call as a momentum upswing, and the one that is on your left hand side, that is what we call as a momentum downswing. So these are diagrammatic examples. So even though they look like a trend, they may resemble the structure of an uptrend or a downtrend, they have nothing to do with the trends. Alright, as once I show you this particular setup on the price chart, you will be able to see that, you will be able to understand this particular concept very clearly. So here is an important factor or an important point that you need to consider. So actually momentum swings, as I pointed out before, are actually caused by the activity of big orders. So whenever big players try to buy, or whenever they try to sell the shares, or whenever they try to buy or sell any particular assets, they are not going to reveal their trading activity, right? Unlike small traders who usually place their orders with their retail broker, these big players like financial institutions and hedge funds, they'll be trading with someone like investment banks and some big, so most often what happens is they will try to hide their order flow, they will try to hide their trading activity, alright? And that's the reason why it's not very easy to identify their behavior directly by using the price chart. But with the help of momentum swings, we can guess their trading activity to a certain extent. Even though we cannot say for 100%, we can at least make a good estimate like where exactly these big players are entering as well as exiting in the market. And apart from that, the uninformed traders who trade against the momentum swings, they eventually end up getting crushed by the market. Here you have all these small and minor reactions within this swing, right? So all these reactions are likely to be uninformed traders who have taken position against the existing swing. So whenever the prices moves against them, they'll be forced to exit from the market. They'll be forced to exit from their positions. All right. So let us look at this particular, the concept of momentum swing with the help of a chart. All right. So right now I'm looking at one-day chart of Bharti Airtel. So if you look at the chart over here, and if you focus on the price action that is taking place exactly over this particular point, this is what we call as a momentum upswing. So the price action that you can notice exactly from point A till point B, this is what we call as a momentum upswing. And if you look at this particular price action over here, you can notice the market didn't go up in a straight line, right? Instead, what happened was there was a lot of corrections in the middle, right? There was a lot of small corrections which are taking place in the middle, and the prices kept on increasing higher and higher even after these small corrections. So right after the formation of each of these bearish candles, you can see that the bullish candles kept growing even larger and larger, right? So what's actually happening here is all these small bearish candles that you see that is taking place within these swings, all these small bearish candles, they are indications of uninformed traders. they usually tells us all these uninformed traders or small traders who have taken short positions, they are somehow caught in the trade, right? They are somehow caught in this particular price action and they are actually getting crushed by the market momentum. And apart from that, you see all these large candles, right? So these large candles are indications of big orders which are consuming these small candles. Okay, so these large candles that we see on the price, which are actually taking place right after these small corrections, are indications of big order flow which is coming into the market, and these order flow are coming into the market right after these small traders are taking the position. Okay, so all these small bearish candles you see on the price, these are all indications of small uninformed traders. So if you look at the price action right after this momentum upswing, you can notice a kind of a small correction over here, right? So exactly from the point B, the place where I have marked the point B, from there you can see a kind of a medium scale correction. I would say a kind of a larger correction which is going on here. So this particular correction, we can call it as the retest of the momentum. So as I said, the point from B, the point till C, right? So what's actually happening is, all these large players who have taken position within this particular swing, they are actually liquidating their positions. They are trying to test the conviction of the market. They are trying to check whether the market really has any buying pressure or not. Say for example, if you have bought some 100 million shares over here, right after this point B, you will sell some 25 million shares to 30 million shares just to check the conviction of the market. Alright, so we call this as the retest of the momentum, because this upswing that we see here, this momentum of the upswing which we are seeing here, is actually getting retested. Alright, so as we can notice on the price, so right after the retest of the momentum, the prices quickly went up. The market made a very large movement. Right, so right after the retest, which has ended exactly around 580, so from 580 to all the way till 720, we can see a very sharp upside movement on the price. So how do we take position in this type of setups or in these type of particular structures? Well, typically what I do is, so whenever I see these type of price action, whenever I see these type of retest on the momentum, I will try to take my position right after the retest, and I will keep my stop losses just below the turning point or just below the retest. So when the prices continues to climb, when the market continues to move up, I can stand to capture a decent returns. I can capture a nice profit if the momentum goes in my favor. On the other hand, if prices goes against me, if the market just continues to go down, I'll be able to exit from my position for a minor loss. Alright. So what you can do is, you can wait for the retest of the momentum, and once the momentum gets retested, you can quickly get in and you can capture the next upswing that continues from this particular spot. Alright. Okay, so right now we have seen a bullish example of a momentum upswing. So now what we can do is, we can look at a bearish example of a momentum downswing. All right, so let us see how we can take a short position based on this type of setup. Let's do that. Right now, as you can see the chart, I'm looking at one of the top Nifty 50 companies, that is Marico Limited. So this is 1 hour chart of Marico, and if you look at the chart and if you look at the price action exactly over here, you can notice a very good momentum downswing, right? So from point A till point B, we can see a very good momentum downswing, and within this momentum downswing, we can also notice a lot of smaller corrections, right? So we can see a lot of smaller bullish candles which are taking place within this downswing. But if you look at the price action over here, after each of these bullish candles, you can notice the bearish candles are getting stronger and stronger, right? The bearish momentum is just becoming a little larger than the previous candles. So if you look at this particular price action, you can also understand some of the uninformed buyers, right? The people who think that the market is going to go up, the people who think, the stock has already fallen too much, they will try to take their positions within these type of downswings. And most of them are going to be uninformed traders. And we know what happens when uninformed traders trade against the momentum downswing. They are going to get crushed in the market. All these minor corrections that we see within this downswing is a good example of a small uninformed traders trying to take positions against the downswing. So right after this downswing, right after from point A to point B, we can also see a nice correction over here. We can notice a very good solid correction. So this is a little larger correction than all these smaller corrections which has taken place within the downswing. So this correction is once again nothing but a retest of the momentum. Alright. So the retest of the momentum means, as I pointed out in the momentum upswing, so this is nothing but the sellers are trying to test the strength of the buyers. Alright. The market is trying to test the strength of the selling pressure. So typically what's happening is all the sellers, all the big players who have taken short position within this downswing, all the big players who have took some put option, who have taken short position in futures, what they will do is they will try to test the strength of the market. They will try to see whether if there is any buying pressure that exists in the market or not. If there is no buying pressure, then what happens is quickly the prices will turn around and fall further. It will continue in the direction of the momentum. So that's what happened here. So at this particular point, what we can do is we can take our position right after the retest. So when you see the retest, right after the retest, I can go for a short position. So when I say short position, I can take my short position either with the help of an option contract, or I can go ahead and sell it in the futures. So once I take a short position here, what I can do is I can keep my stop loss a little above the turning point, and I can try to capture this entire downfall. I can see the profit and I can capture the profits of this entire sell-off. Alright. So we can capture the profit here. So we will try to get into this retest of the momentum downswing in order to capture this whole profit which has given us a nice return. So if you have taken any put option, you might have made some decent returns over here. On the other hand, if the prices have gone in against my direction, say if the market goes against me, if it goes further to the upside, I can exit with a minor loss so that my losses will be very minimal if the momentum does not continue in my direction. On the other hand, if the momentum continues to go in my direction, I can end up making some decent profits. Alright, so now we have understood the basics of momentum upswing and momentum downswing. So let us recap a little bit and let us summarize what we have learned so far. So first of all, momentum swings usually indicates the activity of big orders consuming small orders. So in other words, the big order flow of big players usually takes advantage of small traders who try to get into the market, who try to trade against the momentum. Alright. So this is a simple setup that you need to look for when the market trend changes. Alright. Say for example, if you are looking at an uptrend and right after the uptrend, if you see a momentum downswing, you can expect the trend to change the direction. Okay. In a similar stance, say for example, if you are looking at a downtrend and right after the downtrend, if you are seeing a momentum upswing, you can expect the market to change the direction. Alright. So this is a kind of a trend reversal setup. Although there are a lot of things we need to look for, a lot of other pointers we need to consider when we want to trade the trend reversals, which I won't be able to cover in this small video. But you can keep in mind this particular momentum upswing as well as this momentum downswing setup can be used to trade trend reversals. Okay. And here is the most important thing you need to consider. Make sure to look out for retest. So when you are getting into the momentum swings, don't try to trade before the retest. Make sure to look out for the retest. Make sure the market is retesting the momentum. So once the price action retests the momentum, then you can try to take your entry. Alright. Okay, so hope we learned something interesting in this particular video. So if you understood this particular concept, If you have any doubts, if you have any questions, or if you have any feedbacks or any suggestions, you can leave it in the comment section below. I'll be able to go through the comment section and I'll be able to answer your questions. And at the same time, if you like this video, if you find this video a little helpful and little insightful, I recommend you to click on the like button. And finally, I would like to say thanks a lot for watching and happy trading now.